Now, U.S. inflation eased slightly in April but still remained elevated. Moderating price pressures is good news for the United States, as that gives the Federal Reserve room to pause here. Now, the consumer price index, it rose by below forecast 4.9 from a year earlier, the first sub 5% reading in 2 years. The economists had forecast the rate to be 5%, but the reactions to the U.S. inflation report were mixed. For some analysts, the inflation report does not give a clear signal on the Fed's rate path. The inflation has definitely moderated from overheated rates last year, but it still remains elevated and above the Fed's target of 2%. The Fed's dichotomy is whether to look at inflation and higher rates on focus on the banking crisis. The aggressive rate hikes over the past year have hurt the banking industry heavily, but the central bank had no choice but to list rates because of soaring inflation. Now, the domino effect of banks collapsing is keeping the Feds on its toes. WION is now available in your country. Download the app now. Get all the news on the move.